look, I'm not successful if you're not. I will not fulfill my mission. My mission is to help people.
You're in the right place at the right time.
Brother, don't change my life.
The greatest entrepreneurial conference on the planet.
$10x your lives. 10x the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of.
My name's Grant Cardone. This is the Cardone Zone every day, every damn day. I'm going to show you how to get money a lot cheaper than this. Hey, get yourself in a position to sit in that chair right there. Are you the solution or are you the problem?
Yeah, well, we're talking about what does it take?
They don't know you and they're not thinking about you. They do
forgot
know you and they're not thinking about you.
They forgot you. My name's Grant Cardone. You are in the Cardone Zone where I wake you up, I shake you up, I punch you in the face. But mostly, I'm that good uncle.
What's happening, Grant Cardone?
Yeah, what's happening, man? You got a deal or you got a question? It's Monday, and we're moving over here. We got a lot going on here, last day of the year. Hope you're doing well, and more importantly, I hope you're doing better when this show is over, okay? Today and every Monday, real estate investing made simple, brought to you by the Cardone Zone, 305-865-8668, 305-865-8668. You'll either have a deal or you'll have a question. Congratulations, dude. Okay, congratulations on your marriage, man. Okay, we got people getting married here. We got people getting divorced. We got people getting together, walking away from one another. One thing that we do in the real estate game, folks, is every Monday I come to you to show you how you get in this game. Whether you invest with me or invest in your own, I want to help you get in this game. You got to get in this game. Why? And then I'm going to talk to you about how we figure returns, okay? The reason you want to get into the real estate game is, number one, is because you protect your investment. Income producing real estate, cash flow positive real estate, over the last 100 years has gotten more and more valuable, okay? This is not, you want to protect your capital. Number one most important thing to money is don't lose money. Number two, you want cash flow, okay? The big CF. CNBC Make It wrote an article about me saying cash is garbage, cash is trash, cash is not king. You need to rethink that position. That was the bank trying to tell you to keep your money in the bank, and I'm telling you don't. You need cash flow. You should be measuring your investment based on cash flow. Three, you want appreciation in the future? Okay, and I'm going to show you how we figure how would a 250% return be? Would you guys be impressed with 250%? Would you be impressed with 150%? Yes. You're like, dude, I'll take 150%. I'm going to show you how we do that on every deal. I'm going to show you how I've done this on every deal. In fact, I'm going to show you how I've done more than 250%. And people that are investing with me at Cardone Capital, both accredited and non-accredited, are getting over 150% on their money, okay? But they get it at 5% cash flow. I'll explain that to you in a second. Number four, I just had a guy leave my office. He's making a couple $1 million a year. I said, bro, you need depreciation, okay? DEP, depreciation. Real estate has the lowest taxed income of all asset classes there is. Stocks, Bitcoin, all the cryptos, even bonds, real estate has the lowest rates, okay? So how do we figure our returns? This is how returns are figured. Now, when you go to CardoneCapital.com and you read our operating memorandum, it says this: 5% cash flow, and a 15% IRR. Some of you call this return on investment. That would be wrong. You would not call this return on investment, okay? You would call it the internal rate of return from the property because you own a piece of property. The internal rate of return does not include your taxes, okay? All these numbers are before taxes, and that's what many of you don't understand. You're like, hey man, I can lend money out at like 8% a year or maybe 10% a year. Okay, good, but you don't own an asset. I had a guy tell me that yesterday. He's like, why would I put my money, I can get 12% on my money, loaning it out, why would I put it into Cardone Capital at 5? Well, I'll tell you why. This money can't appreciate. If I give you $10,000, or you lend me $10,000 and I pay you back 12%, that means next year you're going to have $10,000 plus 12%, $1,200. You made $1,200. Over here, you earn 5% on your money. $10,000 earns $500. Plus the 15% IRR, we expect with the cash flow that if that's $10,000, this would be $15,000 when you're done. Plus, and dude, I get to depreciate my gain so that I don't pay taxes. If you're a money shark, you're a lender, and you're getting 12% on your money, okay? And I borrow $100,000 from you. $100,000, 12%, or 5,000, or 10,000, or whatever your number is, right? Just do the math. 12,000. That means I'm gonna make $12,000. I'm the loan shark. Where's the appreciation? Okay, if this number's 5,000, our minimum investment at Cardone Capital for non-accredited investors, this person would make $600. You take $5,000 of your money next year, lend it to your brother that never pays anybody back. That's why he's borrowing money from you, deadbeat. Okay, how much does this pay him? 12%, $600, right? Ooh, that's great. You're going to pay half of that in taxes because that's ordinary income. You with me? Now watch. As opposed to, oh, you're not liquid here either. You can't get the money back from your brother-in-law. Money's gone, dude. You might not get the money back from your brother-in-law. That is a business though. Might be a good way for you guys to start making money if you're sitting on $5,000. This would be a lot better than having it sit in the bank. But this is how you figure the return on real estate. If I invest $5,000 at Cardone Capital or in one of your ventures, however you do it, and you only get 5% on your money, that's $250 a year. Is that right? 5,000 times 5%? What is that, like $48 a month? Okay? You're like, oh, that's nothing. Yeah, but this is the cash flow. This is how you figure the return. We on our, what is it called? On the I need Ryan right now. Where is Ryan, guys? When you go to Cardone Capital and you read the prospectus, it says 5% with an internal rate of return of 15%. Okay? 15% is code for 1.5x. Now, I've never done 1.5 on a deal. 305-865-8668, by the way, if you want to call me. 1.5x, that means you get your $5,000 back plus $2,500. That would include this measly $250, $48 a month that you got. That would include this. That means your $5,000, if I hit my internal rate of return, I've never hit 1.5, ever. In 35 years, I've never done 1.5. That's what we advertise. I've always done 2.54, 3.5, 4.5, 9x. So you can literally see all the deals that I've done in my career. Okay, so all I'm advertising right here to my sister, I tell my sister, dude, you're not going to lose money. You're going to get cash flow, and we're going to get some appreciation. Your money is going to grow over time. You with me? Typically, this is what I do on every $5,000. $5,000 the first year is going to earn 5%. Year 1, year 2, year 3. In year 4, we should get, year 4 to year 7, we should get rent growth. How many of you believe in 5 years rents will be higher in America than they are today? Yes. They've been going up for since 1945. Don't do that. Okay. So what happens here? Let's say this goes to 7% in that year. Let's say in year 8 to 10, let's say the rents were $1,500 on this deal right now. That's what people are paying right now. In year 10, what could the rents be? $2,000. If rents go up 3% a year with inflation, times 10 years, the rents would be 30% more. Let's say they're $1,500 today. 30% of that is what, $450? Good. So now the rents are $2,000. All right? Now, that $450 goes where? Cash flow. Increases this number, the 5, the 7, and the 10. Let's say I'm earning 10% of my money now. Okay, so $5,000 times 10% a year, I'm earning $500 a year on my money. No big deal, but that's just the first step. There's 2 and a third step. The second step is what? This property is now worth more money because it takes in more rent. So let's say I get a 3.5 multiplier. I promised 1.5. Let's say I hit a 3.5. I've done it so many different times. I just sold a deal in Nashville, Tennessee. I think we did 4.8. This is what happened. I put $8 million down. I earned 8% on my money while I was in the deal, $640,000 a year. I earned 4.8% on my money when I sold it. 0, 4, 3, 8. I paid an $8 million penalty to sell it early. $8 million penalty. I didn't call my investors. We made $29 million on the deal. After the damn penalty and before the cash flow. You know what I promised everybody? I promised everybody 5% of their money. I gave them 350%, and I did it in 4 years. My name's Grant Cardone. You're watching the Cardone Zone. How to make real estate investing simple. We got the phones loaded. Do you have a deal or do you have a question? Cardone Capital is now open for non-accredited and accredited investors. Minimum $5,000 and a minimum of $100,000 for accredited. If you guys don't take advantage of that thing, I'm telling you something. By Friday of this week, you're going to be like, I want to get in, and that bad boy's going to be shut down, closed, because people like what I'm doing. Stay with me.
I want you to have an experience that you will never, ever forget. We want to make this a big event for you. Our goal is to change your lives. This is what you have to go through. Anybody can be 1X or 2X. To get to these multipliers, to blow the roof off of your life and career to 10X in your business. 10X your lives. 10X the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of.
Mail tag. More sales in less time. Know when your links are clicked on within your emails. Track performance metrics, giving you unlimited real-time email tracking. We give you precise email scheduling. Make sure your emails arrive at the right time every time. Increase your open rates and perfect your multi-time zone sending. We automate your follow-up process. See how it can work for you? Try it completely free for 2 weeks.
Hey, welcome back to Cardone Zone. The Cardone Zone. We're talking about real estate, making money in the real estate game. Dude. We're talking about how this is different than, let's say, your Amazon stock. Okay, you bought Amazon, AWS, you bought Amazon, you paid $1,400 a share for Amazon, and you're like, hey, is it going to go up or is it going to go down? You don't know, by the way. Oh, I'm in it long term, man. I'm in it long term. Good. Let's say it goes up 10%. Okay, you had to wait 18 months, and it went up 10%, and you made $140. You bet $1,400 and you made $140. This money right here is taxed like a. If you sold it at 11 months, you got hammered, probably a 50% tax rate, okay? If you wait 12 months and 1 day, You're forced now to wait. You can't really sell when you want. If you have to wait, then you're going to be taxed at your normal income rate, okay? So you made $140. You're not going to be taxed on the $1,400. That's what you paid for it. You're going to be whacked right here on the $140. The problem with this is, okay, is you couldn't make a bet big enough here. First of all, who wants one piece of stock for $1,400? Right? You could have put $5,000, because I'm not going to let you put $1,400 in. You could put $5,000 in a piece of real estate and watch what happens, okay? Number one, you get cash flow. Did you get cash flow on the Amazon stock? No. Did you ever get a check on the Amazon stock or the AT&T stock? Yeah, on AT&T you got a stock every 3 months. On AT&T every 3 months, you pay $30 for AT&T stock every 3 months. You're going to get a check for $2, about 6%, 6 to 7% every quarter. Every year, but you're going to get 4 checks throughout the year. Every 3 months, they're going to send you a little check, okay? 6% of $30, how much is that? Let me see, if you bought $5,000 worth of it, divided by 300, or $30, it's $27 today. You'd have bought 166 shares. Okay, and $1.80, 166 shares times $1.88 equals $312. That's what you got paid on that investment. $5,000 worth of AT&T stock. AT&T might go away, by the way. Sprint and T-Mobile might just put a freaking headlock on freaking AT&T and shut them down. Who knows? Okay, all right. What's the appreciation here? Could go up, it could go down. You got paid a dividend. This is called the cash flow. We distribute cash flow every month. Why? Because you work every month, you get a check every month. Wouldn't you want your money to work for you every month and get a check every month? Let me talk to the first caller, okay? All right. Now watch what happens here. With the real estate, we distribute every month cash flow. Boom. 2, you get appreciation. Bang. You're not going to lose money here. Why wouldn't you lose money on real estate? Because I'm not going to sell it if it's worth less today. I'm just going to keep getting my cash flow. And 3, we get the tax advantages that real estate offer. That's why when I set up Cardone Capital, I did not set it up as a REIT. Because if I set it up as a REIT, a real estate investment trust, you would not get the benefits of the tax advantages. And I want the tax advantages, and I want you to have them. I want my sister to have them, my brother to have them, my friends to have them, Johnny to have them. Anybody that invests with me, I want them to have the same benefits that I have. Maybe one day I'll change my mind about that. Maybe, hey, I'm a big bank now. I don't give a shit about people anymore, and I'm just going to rape and pillage. Okay? Maybe I will. Maybe I will. Maybe a Goldman Sachs is going to give me a whole bunch of money and say, hey, dude, you got to play the game, dog. Okay, maybe I will one day. But right now, you guys can take advantage of Cardone Capital and get the same exact benefits, except I do all the work. Let's talk to the callers. Richard, you got a question or you got a deal?
Grant, good morning. I have a deal that I'd like to review with you. Is Captain Ryan in the building?
Do I have what?
Is Captain Ryan in the building as well?
Yeah, I don't know where Captain Ryan is right now.
Okay, gotcha. All right, I have a deal I'd like to review with you. We're thinking about acquiring and putting a letter of intent and an offer on.
Okay.
The property address, would you like the address first or the numbers?
Please.
Numbers or address, Grant?
Give me the numbers. Give me the numbers.
Okay, all right. They're asking $0.45 million for it.
Say again.
$3,450,000.
Okay, I like the size.
Built in 1985.
Okay.
34 unit.
I like the size.
12 in front of me. And I'm kind of confused. They're saying they're operating this deal at 36% expenses.
Okay. What's the NOI on the deal?
The total income, according to the T12, is $422,627.37.
Okay, and they're operating at how much?
The total operating income, according to the T12, is $153,111.36.
Okay, so I think he's
NOI.
Yeah. NOI is what?
9516.
How much?
I would need to assume the loan.
No. What is the NOI again? What is the NOI again?
I would need to put 44% down. The interest rate,
Tell them to listen to me. What's the NOI again?
Fannie Mae, Freddie Mac.
What's the NOI? He can't hear me.
So it looks like a great deal.
He can't hear me.
Dude,
Can you hear me? Can you hear me? Can you hear me? Can you hear me?
Fine.
2 ears, one mouth, man. He's just talking. Yo, dude, listen to me. Listen to me. You guys call in, man. Yeah, y'all call in. Y'all need to listen, man. He trying to sell me the deal. You go, dude, listen. 2 ears, one mouth. You don't even have to tell me more about the deal. You guys, all you got to do is tell me a little something simple about the deal. I can tell you the rest of the deal. I know how to look at this deal from the top, from the bottom, from the middle. So, and until you know how to do that, I don't need all these numbers to figure this deal out. He's going to borrow $2.5 million. I know probably where he's going to get this loan from. $2.5 million today is going to cost him at a 1.7 over the 2.7. He's going to get a 4.4% loan. Might get 1 or 2 years of interest only. Doubt it though. You talking to him now? He's still gone. He's still talking to himself. Okay. $2.5 million times 0.045. I'm going to go ahead and add up. Okay. This is going to cost him $112,500 a year. I'll tell you right now, I already like the deal. Just tell you, I don't know where the deal is. I like the deal just because I'm looking at the numbers saying, dude, I like this deal. 34 units, I love that because it's big enough. Let's say the rents there are $1,100 a month times 34 times 12. It's $448,000 of income. If he got it all, he won't. Nobody does. What number are we going to use here? Times 90%? Y'all want to use that? Yeah. I could whack it. Let's do 85% because everybody's negative right now after they saw my post about a recession's coming. Just going to whack it. Now it only brings in $380. Okay. He told me the expenses on that deal are $130. I heard him say that before he kept running his mouth. Okay. There's $250. What did I say this was going to cost? $2,500. $2.5 million times 0.044 equals 110. Dude, I love this deal. Deal makes $140,000 a year. Free cash flow. You guys that are haters, y'all all hating, oh, goddamn, Cardone. That's 14% a year, folks. You give me 14%. You give me 5% on my money? Somebody told me the other day, 5% is nothing. Really? Really? Okay, I put $60 million down on a deal. I get 5%. I get $3 million in free cash flow. Now how you feel about it? 3 million. I'm sorry, let's not abbreviate when we talk in millions. How do I undo this? Look at that. Let's not abbreviate. That's blasphemy. Okay, let's see all them zeros. They make me honey. Okay, now does the 5% impress you? Because the guy told me he's like 5% is nothing. Well, dude, okay, I don't know what your financial situation is. I know what mine is. I'm happy with the 5%. I'm sorry that you're not. Okay, that's $3 million a year. That's $250,000 a month in free cash flow before the potential for appreciation, which, by the way, is tied to not the economy, it's tied to rents. And this is what you guys are missing. Some of you out there that think because your house didn't appreciate, or you think because the comps in the neighborhood haven't gone up, that has something to do with this appreciation. They're not even connected, dude. The appreciation I get out of apartments is tied to rents. If the rents go up, okay, if the rents are $1,100 today, and then they're $1,300, and then they're $1,500, and then one day they're $2,000, as the rents go up, so does the appreciation. And so does the cash flow. Because the debt stayed stabilized. The debt didn't change. I bought it right here. This is the value of time and money, man. This is why. CardoneCapital.com. I created this for my wealthy friends that are like, dude, I get it. I got it. I understand. Over $100 million came in from accredited investors in 2018 into our fund. Okay? Everybody's thrilled to death with what I'm doing there. I open it up for non-accredited. You guys that are following me right now, maybe you're following the show, maybe you got my free book, maybe you're coming to the 10X Growth Conference. I open it up for you at my expense because everybody was coming to me saying, dude, you can't just help your wealthy friends. Let's talk to the next caller. You can't just help your wealthy friends. But you guys with the little money, man, you got to appreciate 5%. It's a lot of money, dude. 5% is a huge amount as opposed to things going down in value. Stay with me.
Hey, are you looking to invest in real estate? My name's Grant Cardone. I'm the founder of Cardone Capital, and for the past 30 years, I've been making money with my first business, taking that money and putting it into my second business, real estate. If you're anything like me, the hardest part was making the money. The second hardest part was, where do I invest it now that I have some? When I looked around, my only options were stocks, bonds, and mutual funds, and I hated all three of them because I'm a coward. And that's why I started investing in income-producing properties. Today, we own almost 5,000 units around the United States that produce positive cash flow every single month. Today, qualified investors can now invest with us at Cardone Capital, where we give you access to institutional-sized deals. These are monster-sized deals that can weather time. Look, if you love real estate, if you're a qualified investor and you love real estate, but you don't have the time, you can't find the deals, and you don't have the know-how, go to CardoneCapital.com. I would love to partner with you on my next deal.
Wealth Dynamics is an independent wealth creation firm. We have products and services that help you make money, keep money, and multiply money. You cannot build wealth without doing all three of these things. We save our clients 25% on debt, insurance, taxes, and investment fees, increase income by 30%, guarantee tax-free liquid savings with cash flow banking, and secure 8 to 10% fixed annual returns on your investments without Wall Street. On average, we can do this in the first 90 days of working with you. Simply schedule a free consultation with a wealth coach. Our services often cost you nothing more than what you're already spending. Go to wealthdynamics.com/contact to schedule your free consultation.
Hey, welcome back to Real Estate Investing Made Simple. I do this for you every Monday. If you're on YouTube or Facebook, if you like this, please post comments. Please subscribe to the channel. I'm begging you. If you hate my guts, please bring it on, ding dong. I love the hate. Hate and love, they're just variations of the same thing, man. You emoting. I want you to emote all up in my face. Okay? All right? Okay, so for those of you guys out there that think a 5% return sucks, okay, the next time you say something so freaking dumb, please don't be in a room of rich people because they're like, shit, I'll take the 5. Rich people, listen to what rich people, quit thinking for you. 5%'s nothing. Really? On 60 million? It's $3 million a year. It's 250 grand. You know why rich people get richer in recessions? Because they have money coming in. It's not because they have money. It's because they got money coming in. You understand? Money's coming in every month. Every month I'm getting a check for $250. Do you know what that does? Economy goes to shit, and it will. Check it out. $250 still coming in every month. January, boom, boom. $250. February, boom, boom. The world's going to hell. $250 still coming in. Nobody's buying anything. Nobody's doing anything. $250 still comes in every month. You know what that does for me? I got a bunch of money sitting in the bank too. You don't spend money that you have at the bank if you don't have money coming in. But when you have money coming in, $250, $250, $250, $250, $250, you're like, shit, I can spend what I got at the bank. Most of you will not be able to take advantage of the recession even if you have cash in the bank because you're missing the flow. You're missing the flow. You need January, February, March, April, May, June. Rich families, wealthy families and corporations get wealthier and they use money because they have money coming in. These are life insurance companies. These are pension funds. These are the richest corporations in the world. Money's coming in, easy to have courage. Money not coming in, you got money sitting in the bank, you're scared to use it. Okay? That's why cash flow and appreciation and depreciation and leverage are so valuable in real estate. Go ahead.
Dylan in California.
What's up, Dylan? Deal or question?
I got a deal.
Okay, tell me, what is the deal?
It's I don't know if you want the address. It's in San Diego.
Okay.
It's 4348. Or I can give you the numbers.
Go ahead and give me the numbers. First of all, let me just tell you, I love San Diego, okay?
I know you're from La Jolla.
I know.
Well, it's 2.8 million, 20 units.
Yep.
The NOI is, well, what they have listed is 146. And they have a 3.85 cap rate listed on LoopNet.
Okay, 3.5 cap.
3.85.
3.85, okay. So it doesn't bother me. It doesn't bother me. Everybody's like, oh, I ain't buying the 3.8 cap, man. Ain't no way. Dude, you guys, cap rate, you might want a lower cap rate right now, okay? Where in San Diego is this located?
It's about 15 minutes from the airport. I don't know the exact neighborhood.
Did you say it's 28 million?
It's 2.8 million.
Oh, 2.8 million. Okay, 20 units. Yeah. I was like, whoa. Okay. Okay, let's see. Times a 0.385. Yeah, good. Okay, so it's $1,046,000. Now, this is what's going to happen on this deal. You haven't seen the deal, I guess, right?
I haven't walked the property yet, no.
Okay, yeah, no reason for you to go over there. Okay, you're going to put $1.4 million down. You're going to probably finance half of this. And be willing to, everybody. Don't over leverage your deals. I just bought a deal, it was $101 million. I put $42 million down. Okay? I could have got more money than that. I could have got probably $70 million. I borrowed $60 million on this deal. I wanted the deal, so I put a lot of cash into the deal. That's not a bad thing. It's a good thing. All of you trying to do these deals with no money down, you don't want to do that. You're going to lose the property. That's who always loses the property. So you're going to finance $1.4 million. Is that what you're thinking?
Yeah, sounds pretty close.
Yeah, times 0.0. I'm going to load you up, though. I'm going to load you up. 86,000. I'm sorry. Let's see here. $1.4 million times 0.0615 equals. How much NOI did you say?
They have on LoopNet 146.
Yeah, 146,000. Yeah.
Yeah.
Sorry, dude. I had it at $1 million. That's why I was a little confused right there. I was like, excuse me. Times 0.0615. Okay. 861. I'm sorry, $86,100. Okay. 60K a year. He's going to make 60K a year. $60,000, $5,000 a month. He put $1.4 million down, divided by 1.4. 4.28% on his money. Not a bad deal. Everybody's like, that's stupid. You only have part of the story. Is there a chance to raise rents there?
Yeah.
How much?
Probably right now the average rent is $1,000. It's right at $1,005 a month. So I don't see any reason it couldn't go up to $11 or $11.50. They're 2 bedrooms, 1 bath. Okay, so one of the things I talked about in my book, How to Create Wealth Investing in Real Estate, is look for the 25, 50, 75, 100. You do basically a projection. What if I could raise the rents 25, 50, 75, or $100? How much do you think the rents can go up? I think they could go up to $1,100, which is $100.
What are they now?
The average rent is $1,005.
Yeah. So he's like, hey man, I think I can get another $100 times 20. I think that's easy, by the way. $25 a week. Okay. So that's how much is that? 20 times 100, $2,000 a month. Times 12, $24,000. Is that right? 100, 20 units. $24,000. He was making 4.28 on his money. If I add the 24,000 divided by 1.4 million, that's another 1.7. That gives him 1.7% for a total of 7% return on his money. And I hadn't sold it yet. Now, when we do a deal, this is what we look for. I look for deals that can get me at least 1.5x. Comfortably. I'm like, I'm going to buy that deal. We just bought a deal in Delray for $92.5 million. I put $32.5 down. Okay, we financed $60 million. I added another deal to it. Can't tell you what it is. I can't tell you the name of it yet because they don't want me to. I financed 42. Okay, we put these two deals in a fund called Cardone Equity. Okay, we opened this fund up to my friends. Some are accredited and some are non-accredited. Same funds, different funds because I need the accredited in one fund and non-accredited in the other fund. Then what we do is this. I'm like, hey, that's what I financed. I'm responsible for the financing, you're not. Okay, $32.5 million here. This is our down payments. $28 million, how much is that? I've been talking about this number the whole show, $60 million. Okay, I want to be able to pay my investors back 5%. Who's my number one investor? You. I am. So when I talk about my investors, I'm talking about me, Elena, my kids, my trust. First thing I think about is my money. I buy these deals with my money, okay? And then I go to my friends. Hey, dude, this thing's going to spit out $3 million in cash flow. Anybody want to play? Oh, no, that's not enough for me. Well, good. Don't do it. Because other people are going to appreciate this. There's going to be people that know me and trust me and know that I'm not in this deal for 3%. This is what I'm in this deal for. I need 2x to pay you 1x, 1.5x. I need that $60 million. I need to return. This is my goal. My goal is this. I want to be able to pay cash flow every year. Every month, I want to be able to pay cash flow back to myself and my investors at 5%. And then I want to 2x that down payment. Oops. Okay. 2x the down payment. I want to return. This is the return to everybody. Bang, bang, bang. Everybody get your money back. There could be, let's say there's 200 people that do this with me. 200 people transacted with me Saturday. Okay. 200 people come into the fund. We split up the cash flow every month. Here, guys, here's your cash flow. Okay. Then 3 years, 5 years, 7 years from now, I go to sell the deal. What's my target? That's what y'all should be asking me. Man, I've learned so much in the last couple of weeks, 3 weeks when I opened this fund up. You guys are asking the wrong questions. Dude, what's the exit? Okay. Hey, the exit is this. I paid 92 and 70, $162 million for the two properties. How do I return everybody their 5% their money? I paid $162 million. What number do I need to sell this property for in order to double everybody's money? 200. I just got to add 60 million. All I got to do is add my 60 million. Okay. Now I can actually go in here and do the math to tell me what I have to get the NOI to be able to distribute the money. See, I didn't have to double the value. This is what I paid for the two properties. I paid this. I already bought them, folks, just so y'all understand. How do I feel about them? And when you partner with somebody, ask them, have you bought it yet? How much of your own money's in it? Did you sign the loan? I bought them, or they're under contract. I've signed the loans on them. I've already literally handled and managed. One of these properties is already receiving rent. The second property closes at the end of the month. I'm committed. Whether you come in or not is up to you. I'm already in the deal. That's who you guys should be investing your money with, okay? Then, hey, Grant, what kind of cash flow do you expect? I don't know, 4, 5, 6%, maybe 7, maybe 3.5. It could vary. It can go up and down. I don't mind as long as I get paid to wait for the glory. And the glory is what? I want to pay everybody back their $60 million. Here, guys, here's all your money back. I don't care how long it takes. The longer it takes me to do this, by the way, the longer I got to pay out the cash flow. And then I want to split another $60 million. Okay? And when I split this, I want 35% above you getting your money back. That's where I make my money. Okay, now I either find one guy that wants to buy my deals, our deals, or I put together a bunch of these real estate. I always talk to y'all about portfolio and stuff. I mean, I've been telling you what I'm going to do. I've been telling you what I'm going to do by telling you what you should do. Or I put together a bunch of these deals, not 2 of them, 20 of them. And then I go to those rich dudes on Wall Street or in Hong Kong Singapore. Ooh, and say, hey, I have something huge and massive, big, giant. And they're like, we happen to have $6 billion sitting around, dude, here. Okay. Yeah, what's going on, brother?
What's up, Uncle G? How you doing, man?
I'm doing good, dude. I'm doing good.
Listen, man, happy last day of the year. My name's Davis McNulty. I'm coming out of Pittsburgh. Listen, man, I'm on your last book right now. I just closed up 10X. Sell or Be Sold's in the mail. I loved all of them. I got my seats to the Growth Con. I got general admission, all I could afford, but I'm still going to be there. But listen, man, what I'm really interested in is Cardone Capital, which I've been looking into pretty diligently as of late. And I have a question for you. First of all, I've been speaking to Arturo, great guy. I've been texting back and forth with him. Just want to let you know he's a really, really great worker. He's always responding to me and answering my questions. But I wanted to call in and ask you this one. Probably my 10th or 11th time calling in. Every single time I walk away with value. Thank you for all that you do, and thank you for taking my call.
Oh, thank you, man. Thank you. Do you have a question?
Yeah, here's my question. So I've looked into Cardone Capital pretty extensively. The one thing that I'm left unsure about is the differences between Cardone Capital and a traditional REIT. So I know that Cardone Capital pays out monthly, whereas a REIT pays out quarterly. And I know that you put a cap or a limit on the number of investors you take per fund. So I am accredited. I'm looking into Fund 4.
Yeah.
But I want to hear you speak a little bit, shed some more light on how it's different
it's a great
than
question,
a traditional REIT, because I know that you preach to never invest your money in a REIT.
Yeah.
So I want to kind of hear you talk about that a little bit more. If
Dude,
you don't.
I'll tell you the difference, okay? When you buy into Cardone Capital Equity Fund 4, that investment, you own a piece of that deal right behind me.
Okay.
In a REIT, you do not own that deal.
Okay.
So the differences are so massive, you guys should not even be having, literally shouldn't be even having a conversation about them. One is a piece of paper, a garbage piece of paper with a bunch of made up bullshit. They've been in the chemistry lab. You don't even know what's in the capsule. Okay? As opposed to that piece of property right there. That piece of property, in the case of Cardone Capital Equity Fund 4, there's two pieces of property. This and a deal called Stella in Sugar Land. That's going to be the two deals in there. And I might add a third one if I get the inclination to, if I decide it's the right thing to do for the investors. You will be a partner like I am in that property, which means what? In this deal right here, okay, that we've been talking about this morning, you get the advantages of everything. Real estate, okay? In a REIT, you do not get the advantages. Real estate, R-E-I-T, okay? When they went past the R-E, they had to find an it. What is it? Okay, an it. Short for ignorain. It. Okay? Look, man, if it's real estate, it's real estate. You call it real estate. Why call it anything more than that? Because it became something else right there. You understand? It became an it. What you want to be invested in is real estate. When you're invested in real estate, this is what you get. First, you get the cash flow. The REIT pays every quarter. I pay every month. You know why they pay every quarter? Because they're fucking you to death. Okay? Okay, beep. Sorry, dude, look, can you imagine going to work and only being paid once a quarter? No way. You guys want to be paid every 2 weeks. Okay, some of you that work at night, you want to be paid before you do the work. Okay, number one. Number two, the second thing you want here is you want the leverage of the investment. In a REIT, the only person with leverage in the REIT is Goldman Sachs and Blackstone. They get all the leverage. You get none of it. 3, you want the tax advantages. Okay? 4, you want the refinance possibility. Dude, I haven't even talked about the refinance, okay? What happens if this $60 million that we put down, if I could figure out how in 4 or 5 years to refinance the $60 million, give everybody their money back, and we still own the property? And I write everybody a note, hey dude, here's everybody's money back. Guess what? The fund's not 10 years. I'm going to make it 20 years, and we're just going to collect cash flow and not have any dough in the deal. See, I'm the manager in this deal, okay? I'm the manager. You're the investor. I'm the investor and a manager. You're just an investor. I'm the investor and the manager. I can win a couple of ways here, but I'm doing all the work. My job, I only make a bunch of money in this deal is if I do what I think this deal can do. So the REIT, dude, they make their money by selling this thing to tens and tens of thousands of people. And they get the advantages of the piece of real estate you don't. So I hope that answers your question.
You hear me?
Yeah. Can you hear me?
Is it okay if I ask one more question?
Oh, yeah,
Am I
please.
taking up too much time?
Please.
Okay, so my next question is, what is Cardone Capital's strategy in terms of combating market cyclicality? So, like, for example, you're always preaching that the next recession's imminent and we should all be preparing for that. I'm just curious as to what is Cardone's capital strategy in terms of dealing with a recession?
Yeah. So the strategy is to pick affordable housing in great locations in cities that have job growth.
Okay.
So look where I'm buying my products, okay? We're not buying New York. I'm not buying San Francisco. I'm buying Austin, Texas, and the rents are $1,200. I'm buying Delray Beach, and the rents are $1,100, $1,100 to $1,200, $1,300. Like how did the rents go down from where I'm at? Okay, I'm at a property in Sugar Land. I got $900,000 houses in my backyard, and my rent is there at $1,900 a month. A brand new property. I'm at Woodway Square, across from the Galleria, right behind a Whole Foods, and my rent's $1,200. My rents are going to go up in a recession. They're not going to go down. They're going to stabilize, and then they're going to keep going up over time. So that's how I'm doing it. Everybody should be preparing for a recession. Everybody, which means a couple things. If you have a home, sell your house. If you own a home right now, sell your house and get out, because homes take a whipping in these recessions. Apartments don't take a whipping. Apartments end up with more renters. Except the high end of the rental market gets cracked. These condos up and down Miami, they get whacked to death. I know guys with $5 million in condos that are renting them for a third of what they got in that deal. They get whacked. So condos get whacked. Retail will get hammered to death. It'll be the final death blow to the retail. What else gets whacked? Storage, maybe not so bad because people forget about their storage. It's $80 a month, dude, and they're connected to their mama's furniture that they think about once every 12 years. That's getting mildewed and molded, but they won't throw their shit away, right? So, food and water, okay? McDonald's. Does McDonald's do well in recessions? Shit, McDonald's freaking kills it in a recession. They kill it. Why? Because people can afford a $3 hamburger. And they got to eat. Okay. So when you're out buying real estate, folks, okay, you guys that are doing the flips, the duplexes and the fourplexes, they get hammered in recessions, beat up to death. Just telling you, if you're gonna play that game, and I'm not opposed to you playing that deal, okay? For all the Kevins and the Bobbies and the Timmys out there that you guys want to go out and buy 2 units and 4 units and 8 units because it's easy. Yeah, it's easy until it's not. You better get in quickie. You better have a quickie. You better be able to turn that thing faster than you can have sex with yourself. Because I know you is. Because who would have sex with you the way you're thinking, man? Okay? All right. Cash flow. Leverage, tax advantages, okay? Refinance possibility, and the big APP, and that don't stand for app. It stands for appreciation. Invest your money wisely. Get invested. Start doing this now. It must be on your bucket list for 2019, okay? Add this to your bucket list. More, it doesn't have to happen this year, more passive income than earned income. This is how you get wealthy, folks. But some of you are going to try to do this by driving the earned income down. That's stupid, man. It's irresponsible. Get your earned income up. Make a bunch of money here. Make $100,000 a year right here. Make $80,000 a year here. Okay? And then get yourself on track to make $80,000 here. And keep doing both of them. Don't be dumb, right? So that you can come to work every morning. Like my sister. My sister's 70 years old. She's retired now. No matter what she does, she gets money every month because she invested her money wisely. She did it with me, but she's the one that made the investment. I'm the one that told her about it. Okay, I said, hey, do this deal, it'll be good for you. All right. She trusted herself and pushed that money in. You have to start doing this in 2019. You got to start investing your money. Can't just keep money, make money, store money, and spend it on junk and fuel emergencies. And oh my God, I got this problem. I got to handle this problem. Dude, if that money's gone, it's illiquid. Now you're being paid every month, okay? It starts giving you the security. It starts putting you in a leadership role in your family, by the way, because you have money and stability coming into your life. I hope that happens for you in 2019. I hope you make that a priority. I've made it a priority in my life. It's working for me. You can see the lifestyle that my wife and I have, the kids have. My charities, year after year, I can give to my charities without being concerned about taking care of my kids or my business. Thanks for watching today. If you haven't gotten the book yet, want to know what I'm doing in real estate, how to create wealth investing in real estate, the book's free. Go to cardonecapital.com/book, cardonecapital.com/book. If you want to invest with me at Cardone Capital, we're about to go public on our funds. Cardone Capital Equity Fund 4, Cardone Equity Fund 5 for both accredited and non-accredited investors. It's a great place to put your money. That's where I have 97% of my net worth. The other 3% is used on my other businesses to generate more money so I can invest more money in the real estate. Okay? Good luck investing.
I want you to have an experience that you will never, ever forget. We want to make this a big event for you. Our goal is to change your lives. This is what you have to go through. Anybody can be 1X or 2X. To get to these multipliers, to blow the roof off of your life and career to 10X in your business. 10X your lives. 10X the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of. I want you to have an experience that you will never, ever forget. We want to make this a big event for you. Our goal is to change your lives. This is what you have to go through. Anybody can be 1X or 2X. To get to these multipliers, to blow the roof off of your life and career to 10X in your business. 10X your lives. 10X the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of.
My name's Grant Cardone. This is the Cardone Zone every day, every damn day. I'm going to show you how to get money a lot cheaper than this. Hey, get yourself in a position to sit in that chair right there. Are you the solution or are you the problem?
Yeah, well, we're talking about what does it take?
They don't know you, and they're not thinking about you. They do know you, and they're not thinking about you.
They forgot you. Yeah. My name's Grant Cardone. You are in the Cardone Zone, where I wake you up, I shake you up, I punch you in the face, but mostly, I'm that good uncle.
What's happening, Grant Cardone?
Yeah, what's happening, man? You got a deal or you got a question?